Well, Astral Pearl is a stock in focus purely by virtue of the kind of reaction that the stock has seen to a very good set of numbers. On most counts, the company's beaten estimates quite handsomely. The last time that we spoke to Mr. Hiranand Savlani, he spoke about how capacity utilization levels, which were at 53% in quarter two and were at 57%, if I'm not wrong, in quarter three, would move up to 61% as well, and will keep on inching higher. Let's pose all of those questions to him about what happened at the end of quarter four and how is FY24 slated to be like. Mr. Savlani, good having you. Thank you for joining in. And at the onset, congratulations. I believe I now have to introduce you as not just the CFO, but Executive Director and CFO.
Thank you, Niraj Ji.
And congratulations on a very good set of numbers too. So what went right, Mr. Savlani? Is demand looking okay? What is happening? Because paints and adhesives, I think, had gone up 29% in quarter three as well. So what's happened in quarter four?
So overall, yes, the demand was good, and that is what we predicted also when we communicated with you and with our investor, that the undercurrent on the ground is good because the polymer price was settling down, because continuously fall was there. So because of that, dealers and distributors were not taking the inventory. But once it started settling down, and in fact, January and February, the polymer price gone up. So some inventory gain was there. Then again, March, again it fall. But so because of that, overall, the quarterly basis, there was no gain on the inventory side. But at least sentiment got completely changed. And dealer and distributor, which were shying away to take the inventory, they started again to the normal inventory. So that was one of the reasons. Secondly, the construction activity was also robust in the last quarter. That's why you can see the overall industry, everyone has performed well. So that has helped us also. Third thing for the Astral favor was our East plant. So East has also started contributing to us. So that has also added to our volumes also. And that is overall, with this region, the top line was good. The margins were fantastic because there was no inventory loss. Previously in 3 quarters, if you see every quarter we had a loss of inventory. So we lost close to about 95 crore rupees in inventory in last 3 quarters. So this quarter there was no inventory loss, so that has contributed to the higher margin. Secondly, the contribution from our core product, which is the higher margin product, that is CPVC. So that has given a good growth. So that has helped us to improve our overall margin. Secondly, the value-added product, whether it is a valve, whether it is a Fire Pro, whether it is the Silencio, whether it is a Drain Pro, all value-added products contribution was fantastic in the last quarter. So that has also helped us to improve our margin. And fourth thing is that the economy of scale. This quarter was the highest volume. So that has also contributed to the higher EBITDA. So this all has contributed for the higher growth and the higher margin.
You had mentioned that dealers had started restocking in quarter three, and you were expecting that to continue. And you are saying right now that activity is looking constructive.
Yes, definitely. Now all the dealers are sitting with a very reasonable inventory, and that's why we are seeing that on the ground the situations are improving. On the contrary, I can tell you, we are seeing the better attraction in Q1. Yeah. So whatever the growth you are seeing, 15% volume growth, I can confidently say the Q1 number will be even better than 15% volume growth.
Wow. But Q1, Mr. Savlani, also has the benefit of a low base of last year, right?
Yeah, but I am telling you more than 15%. I have not said how much. So you have to wait for the
of course, as we should. But I'm just saying that Q1 will anyways look good because YOY, the base also was low in quarter one, right?
Yeah, so on base, we will be delivering much more.
Got it. 50. Got it. Now, just trying to understand the pipes business, both volumes and margins. One, I'm sure Q1 will look better because if I'm not wrong, in the last quarter, you had mentioned that Sangli and Aurangabad, if I'm not wrong, 2 plants will start operations from quarter 4 again, if I'm not wrong, and that will contribute to quarter 1. Is that still standing true?
Yes, it's standing true. And we are very happy with the performance and the way margins have come back and the growth has come back in the last year. That's why we are expanding further. So now we are putting 2 more new plants. So one will be in East. There we are putting a new concept. We are taking on the lease, the land and building we are taking on lease, and only machinery we will be putting. So we are going to spend almost 20 crore rupees and we are going to create a 15,000 metric ton capacity in Guwahati. So that will be operational in next 3 to 4 months time. And second plant we are putting up in Hyderabad. There we are going to invest 100 crore rupees. Land is already with us. So we are going to spend 100 crore on capex. And first phase will be 30,000 metric ton, which will be ready by FY25. And another 40,000 will be ready by FY26, because we are seeing a lot of attraction in that geography also.
Wow. Okay. So here's the question. So because you have a bunch of products, I believe the overall capacity utilization is still at 61%. It's moved up from 53 to 61 at the end of Q4. But you're talking about aggressive capacity additions. So are they happening in segments within the business where capacity utilization might be higher than averages?
Yes. And whatever we are telling you, it is not going to happen in the FY24. It is going to FY24 will be only 15,000. FY25 and 26 will be another 70%. So in a phased manner, capacity is going to come. It's not going to come in one go.
Agree completely. Okay. Before I come to the overall capacity utilization levels, one word on the margins, then I have some questions for Q1. So you'll have to give me a few minutes. Margins.
No problem.
Margins, you were expecting a good number in Q4. I believe that has happened. You've beaten estimates handsomely. But you had then spoken to us about how you expect the normalized run rate of 16 to 18% starting Q1. Now, my question is that realistic? Is that conservative? Or is that optimistic?
So it depends on how the volatility of polymer is going to be here. If everything remains same, no change in the polymer, then yes, it is easily doable. 16 to 18% margin will not be a challenge. Now, if the polymer goes in favor of us, then we can hit 20% also. That is what exactly you can see in the last quarter also. Okay. And if polymer goes against us, then in that case, we may hit the 15-16% also. But last year, you can see, in spite of so much of pain in the polymer, we lost 95 crore rupees in the inventory. In spite of that, we were able to deliver 16% plus margin. So that will be the base.
Got it. How have the first 45 days of the current quarter been? Have polymer prices been in favor or have they been adverse?
I think PVC price dropped by 3 rupees on 1st of April. And then after, I think it is stable. CPVC price has already dropped in Q4. So I don't see now from here on CPVC is going to drop further. So should be stable. It's look like that.
Okay. So
because we already hit the lowest level of anti-dumping duty. So now from here on, even if the international price of polymer will go down in CPVC, India will not get the benefit because we have a base price for anti-dumping. So India will not get the benefit.
Okay. But the pricing of the input cost is not adverse at least. At the
100%. It is in favor of us.
In favor of us right now. Okay. Now, a bit about Q1, Mr. Savlani, before I talk about the slightly longer term and the capacity utilization levels. From what I remember last, Sangli and Aurangabad on the pipes side come in. I believe there is a Dahej plant and an adhesives plant which start contributing from Q1 as well. And demand is looking robust. So you have a lot of new plants contributing to Q1 and the existing plants seeing higher demand. This is what is prompting you to say that Q1 will be so robust?
Yes, that's what we say. Otherwise, industry will not be going to grow at a 20%, 15-20%. But we are confident that we will grow. That is one of the reasons that new plants are going to contribute. East, we have just started and it has already touched the run rate of 800 metric ton per month. So there also, we don't have all the products. Now all the products production have started, CPVC and plumbing white, pipes and all these things. So all these things are going to contribute in the next year.
Got it.
That means FY24.
And as an overall capacity utilization for the company at large, it was at 53 when you said, okay, this is rock bottom, from here things will likely improve. They have improved and improved quite swiftly. But 61% is still very low relative to what you would ideally expect. So how do you expect, but you also have new capacities coming. So I'm just trying to understand blended capacity utilizations for the company at large. How do you see them shaping up in FY24 as a year?
So like last time also I communicated that we were decentralizing our plant because PVC pipe is the logistic player. If you don't have a right logistic, then you cannot be competitive in the market. because the freight cost is very high. So once you become a decentralized, then only you can gain the market share. Otherwise, supporting from the distance location, you will not be viable. Then you have to sacrifice the margins. Okay. So here we are adding the plant because we want to go to the near the market. Once we will be near the market, then it will be easy for a brand to acquire the market share. And that is what exactly we are doing. And that is the reason we added the capacity of pipe in Aurangabad and the Sangli and now this East Bhubaneswar and now this again we are adding one more plant this year. So Guwahati. So all these things are mainly the logic is that we want to gain the market share into that geography where our presence is low. So this all is going to contribute in 24 and further it will contribute in 25 because in the very first year you can't get sizable market share. Your brand is there, very strong brand is there. But that doesn't mean that from the day one we will start getting the market share. It will take some time because we have to create distributor, we have to create dealers and all those things. So that process will be already started and it is on. And by year end, I think we'll be having a sizable pressure. And from FY25 onward, you will see there will be a substantial improvement in the volume.
Okay, so let's not talk just FY24. Over the next 2 years, do you expect the blended capacity utilization levels to move up from the current 60-61%?
Yes, surely it will go up.
But sizably or in a gradual manner?
It depends how the market is going to be because it's ultimately the news, you can say geography for us. If the new geography will support us, then we can improve very fast. But if it takes time, then it may go slow also. But definitely whatever the current level is there, it will be better than that in the next 2 years.
Got it. My final question, Mr. Savlani. A word on the free cash flow as well as ROCE numbers, because you particularly speak a lot about that. I understand free cash flows can be impacted in years when plants start off afresh, but still trying to understand how are you thinking about this whole, both of these numbers?
So yes, so I think 300 crore, close to about 300 crore we are going to spend in paint because we are going to acquire the 80%, 51% we already announced and 29% further we are going to acquire in Q2. So cash outflow has still not taken place because all the money is lying in escrow. So right now we have not given to the promoter. So now I think the NCLT order we are waiting, which we are expecting to come in the beginning of June. So once that will be there, we have to spend 300 crore over there. And balance cash flow, we have a few plans in our mind. For the new products within the same category, we are working for that also. We may do the announcement for that products also in the coming time. But right now, because it's at the R&D stage, so we don't want to disclose and misguide the market at this stage, because otherwise everyone will start floating that numbers also, which we don't want. So once I think we'll be ready, we may spend some money to that also. And if we feel that now the cash flow is not utilizable, then we are definitely going to increase the payout ratio. And this year also we have increased the payout. So slowly and gradually, we know that there is no point to keep the cash with us.
Sure. No, but
because cash is generating hardly 6-7% return.
That's true.
That doesn't set the philosophy of Astral.
Yeah. Plus, you have capacities at hand. But no, I'm just okay. Then my final question is this: return on capital employed typically tends to be a bit impacted in years when capacities just come on stream. You have that consistent phase, but at the same time, I'm sure you're trying to work on that aspect as well. So tell us a bit about what has happened in the last 1 year to the return on capital, and how do you expect ROCE to behave like over the next 24 months?
I think next 2 years you will see a substantial improvement because sizable capex has been done. Utilization has not taken place because secondly, we have spent a lot of money into the new products. Like we started tank, then Drain Pro, then Silencio, then Wall, adhesive plant. All this has not given the contribution at all to us. This is just the beginning of the journey. So once that contribution will start, definitely this will shoot up like anything. So next couple of years, we are expecting this all new things will start contributing to us. And then you will see there will be a sizable change in the numbers.
Got it. Well, Mr. Savlani, you sounding very confident. We wish you all the best for things to turn out even better than this. Thank you so much for taking the time out and speaking to us, and congratulations on being appointed as the Executive Director of Astral.
Thank you. Thank you so much, Niraj. Thank you.
The pleasure was ours, and viewers, thanks for tuning into this conversation.